Welcome to Compression, the quest to $100 million in just 1 year. Join me, your host, Logan Freeman, in this one-of-a-kind interactive podcast experience where I am on a quest to compress 3 years of achievement and production into 12 months. And no, the answer is not to just work harder. I'm bringing you not only ideas and concepts that are complete at the theoretical level, but they're also effective at the applied level. Look, guys, knowledge is not power. It is potential power. Knowledge plus massive strategic action equals power. We're talking about strategy, systems, accountability, all in real time. This is Compression. Oh, welcome back to a special edition of the Compression Podcast. Today is going to be a fire episode, one that I'm going to be very intentional about. We're going to review the goal, purpose, strategy, or the GPS system that we put in place 90 days ago, or more like 60 days ago. We're going to talk about how to make a decision, the process that you can go through to make decisions easier for you and for you to see all alternatives and options. And talk about why pros and cons lists are not the answer. You have to go deeper. You have to take the ideas and then move to action. I'm going to talk about how we do that in our business. And I've got a real life example of that, what we're going to go through as well. Thinking about revenue generation, all you business owners out there, everybody that is tasked with bringing revenue in to your business and to the business that you're working in. I think this is going to be a very helpful exercise for all of those folks out there. And then there's some questions that I always like to ask myself to apply leverage to anything that you're trying to do. And that's what we're all about here on the Compression Podcast, is doing more in less time without working harder. So we'll talk a little bit more about the focus funnel, eliminate, automate, delegate, and let's dive right in, man, because we're 60 days in to the GPS. And so I'm going to go over what we laid out 60 days ago, give everybody an update on where we're at with those things. And then we'll dive into, how I'm thinking about making the decision, because we've got some strategy sessions coming up in the business that I want to talk through and kind of get some clarity on before I go into those meetings with Parker and Corey and then our executive team at FTW. It's funny. No longer can we just sit here and go through these kind of scenarios and then go make action happen in the business. We've got people that have to be communicated. We have a vision that has to be laid out, and we have to help delegate that now. And as you grow, it's an interesting transition to go through. Last 4 or 5 months have been, trying to understand that transition and implement it in the right way. I have felt somewhat frustrated at times because I'm no longer a solopreneur, so I can't just take it and then go and do it. I have to get kind of, like Congress has to do. They got to get consensus, across the board. Speaking of Congress, it looks like we got our debt ceiling lifted, so that's good. Our government's not going to shut down, so that's important. One thing I've been tracking a lot lately, and I want to put everybody up on game before we get started. Man, I bought this iPad like 3 months ago. I never turned it on. I am notorious at this, like buying something and just letting it sit there. But I turned it on and I started to, and I don't have social media on it, right? So you can't get no LinkedIn, no Instagram, Facebook, on that stuff. But I started reading the Wall Street Journal on there, man, and I love it. It's like this, their app is one of the best out there, and it's so interesting to grab my news off of there and be able to read there while maybe Taylor's watching a TV show or something like that. But it's been helping me implement some more easy to read kind of situations, and you can just turn it on real quick, and I got my app there. But I've been following along with some things. Obviously, we got Omicron, whatever you want to call it, the variant coming in. And so it's interesting to see the markets kind of go up and down and up and down. And it reminds me, because I've been thinking about investing some money recently. And it reminds me, like, why we're in the commercial real estate world, because you don't have to worry about all that stuff. I just like to know what's going on, because I talk to investors. I talk about different things than other sponsors do. I talk about what's going on in the economy and stuff a lot, and it gives people a lot of confidence that I'm staying in touch with that stuff. But it doesn't really affect my business decisions or investment decisions. I'm not day trading. I'm not doing crypto. I'm not doing any of that stuff. So it doesn't really matter. But I love to see why it just kind of illuminates why we're in the long-term investment strategy, because, man, you can't time this thing. I mean, people are getting in the market, out of the market, and they're losing money like crazy. It's just all over the place, man. But when you set it and forget it and check back in 5 years, it's a little bit better strategy in those senses. But if you don't have an iPad, I highly recommend it. It's a great little tool to be able to read and get articles and pick some things up that you might not have otherwise. So anyways, I'll start with this, because I re-listened to James Clear. I think he's one of the best thinkers that we've got right now out in the space. And he went on with Ed Mylett recently on the podcast. And, it was a good podcast, really good show. So if you haven't checked that out, Ed Mylett and James Clear, it's getting shared all over the internet. But what I love about James is he doesn't care who he's talking to. NBC, Ed Mylett, Tony Robbins, anybody out there, he's just James. He knows it. You can tell he's an expert, and it's because he's put the work in. And I really respect that. But he said, when considering a new project or opportunity, one of the first questions to ask is, how do I want to spend my days? Make as few choices as possible that violate your answer. Many opportunities seem exciting, but actually give you less of the life that you want. And I think that sets the stage perfect for today's episode, thinking about how to make decisions and asking yourself different questions and working through all of these different opportunities. Before we do that, let's jump into the GPS. I'm going to go through the goals that we set out 60 days ago. But before I do that, Jerome, I haven't heard from you yet, man. I've just been on a roll here. How we doing, brother?
Amazing, man. Just locking in, trying to, and I guess it's not really trying, finishing the year, right? Yeah. Looking around, making sure that things are as they're supposed to be. And the start and the end of the year are kind of artificial deadlines that we create for a lot of our goals, but really just making sure that progress was made towards the North Star, and adjusting and making sure that the journey that we're on is the journey we should be on. Because sometimes I have the habit of just staying committed to the thing, even if I know that it's not actually providing the outcome that I desire, to say that I finished it. And I'm not a big fan of starting and stopping things, but you got to do that pulse check every now and again when you're doing the final sprint, to get through the line, to make sure that you're running at the right thing.
Yeah. I saw something Charlie Wessel put on on LinkedIn the other day. Charlie is a hoot. If you guys don't follow Charlie or talk to me, man, that guy is a hoot. Just a Carolina boy. And he put up something on there that Usain Bolt took 4 years to run the first, like 3 seconds or something like that. He didn't run any faster or any farther than the first, 10 yards or something. He focused on that for 4 years. And that was really interesting to me, because, the way that he broke that process down, obviously Usain Bolt, fastest guy in the world, right? And it was interesting to me that he was focused on that, getting started, starting the right way. I think that's so important in regards to goals. And you have to be willing to start and start on the right things. And that's what got me really thinking about all of these different opportunities. So GPS, the goal. First one, cultivate a personal relationship with Christ. Say no to sin every day. It's a work in progress, guys. I mean, praying daily. I got my Spotify. I love Spotify. I posted this on LinkedIn, got no traction yesterday. That's okay. like zero. Nobody cared what I was listening to. I thought it was quite funny. I was like, oh, people are going to love this post. Absolutely just flopped. It just flopped. But Spotify is so cool because they do this 2021 in review, and they show how many minutes you listened and all of these different things. I thought it was really cool. And the first, my most listened podcast is a Catholic podcast every single day. I listened to it like 265 out of 365 days last year, which I thought was really good. And that helps me with my praying daily. Mass and adoration. Been going to mass every other week, going to adoration every other week. Just flip flopping those. So that's been really helpful on that. Saying no to sin, but not 100%. Obviously, I'm a flawed human being. I'm going to continue to sin, but being cognizant of it and having alternatives whenever I see the food or my eyes start to wander or certain things like that I struggle with. I feel really good about that, man. And my soul wants to be better, which I think is the goal of that whole situation. So that was the first one. Second one, to be present with my family, make Taylor feel special, and be on the same page every single day. Every single day, that's not easy. But what the growth that has come from the last 60 days of this is I haven't raised my voice. I have been patient. I have not reacted to any situation. I have responded. I've made Taylor feel special, and I've been very present with my kiddos. And I can get better on it. Sure. Need to get off my phone when with the kids. Much better. Much better. Just removing that from the surroundings is really important. And that's what James Clear was talking about on the podcast too. So I don't need to go through that anymore. To lose 12 pounds and weigh 255 by 12/31, 2021. Okay, so I weighed in about 2 weeks ago at 263. Then Thanksgiving happened. I'm a little worried. I'm a little scared to jump on the scale. I've taken a detox week this week, eaten really clean, worked out heavily, and drink a lot of water. The lumen tells me that I'm burning fat, which is good. And I've had no alcohol this week. So obviously my energy levels have been through the roof. You've heard me talk about energy levels. My body battery has been recharged in the morning, up between 85 and 90 every single morning. Last 2 weeks, it was between 10 and 20 when I woke up. So huge change there. Identified the number one factor of that, which is alcohol. So when I know I'm drinking the night before, I know I'm not going to sleep well. And so I have to make a cost benefits analysis of that. And it doesn't matter if it's one drink, 10 drinks. My body says, all right, great. Well, you just put a foreign substance in your body that we're going to have to rid. And instead of recovering, we're getting rid of that for you right now. And so, when I first started this whole thing, guys, I was 285 pounds, got down about 270, 267, 263. So been tracking well. I'll tune in next week on where I'm at on the weight there, guys. So I think that's been really good. And you can see it in my clothes are fitting a little bit, a little bit looser. I'm enjoying my workouts. Changed the workout room from upstairs to downstairs. Huge benefit. So that's going really well. To complete $25 million in transactions and to put $100,000 in the bank. Well, I'll tell you this: we did get a project closed last week. Maybe it was earlier this week. One of the two. Big project close, sitting at 88.5 million. My big deal that I'm working on right now is 13.5 mil. It's going to close in January. So to complete 25 million in transactions, boys and girls, I got 30 days to do that. And I will tell you, I am not feeling very, very confident on that front. That's okay. What I'm tracking more is, are we putting in the action to be able to hit that number, whether it be January, December, February, whatever. And I've identified some bottlenecks with that and taken on more in regards to underwriting new deals and talking with brokers. So I feel actually really good about kind of where we're at with that, even if we don't hit the $25 million in transactions this quarter. Here's a huge win. Strategic initiatives, network building, getting the brokerage set up, the fund, the podcast, getting Lee on board and up to speed. And all of those, I can tell you right now, are moving forward, which is so exciting because that is so much work right there. Just getting the strategy put in place, and then actually getting it to action. And we're sitting in a really good spot on all of that. Jerome gave me some good feedback on the FTW podcast. Talking with vendors this week and have a really good idea of what that's going to be. I'm going to go through the Dream 100 and the brand script from Story Brand to make sure I really understand who that investor the client avatar, the listener avatar is going to be for that, and then tailoring content to get there and then making it simple. So, if I need Parker, making it simple. If I need a guest, making it simple. And Allison on our team, our marketing director, is going to be leading the charge on a lot of that stuff. So, feeling really good about getting the FTW podcast launch. Exchange CRE is in the works. I'm working on my Kansas broker's license right now. That is like hitting my head up against a freaking wall every single day to make me want to do that. So I've implemented habit stacking. So I'm doing it while I'm on the treadmill, getting in my walking and running while I'm doing it. But it's not fun. Going through the legal courses, the management courses, is not fun, but I'm on track. I finished one course. I'm working on the second one right now. The website's being built. The marketplace is being built. Alex is coming over. All of the stuff has happened in regards to that. The $100 million fund, this is something that we're going to talk about today with the team and next week as well. The fund has to be, in my mind, it has to be capital that's coming in from different sources than we currently have. So that being said, how do we get to the RIAs? The registered investment advisors? Who's leading that charge? All things we still have to figure out. What I did figure out, though, and I'm going to give you guys a little insight if you're a sponsor. Listen, right now, my list is between $2,500 and $3,000. I can raise about $1.5 to $2 million a month. My benchmark was $1 million a month this year. I've doubled that, almost doubled that capacity, which I'm very proud to say. But we need to get to $5 million a month. And so if it's my list that I need to continue to increase, I got to get that list up to about 7,500. I think the podcast will get me about 1,000 folks on the list next year. Then I got to figure out where the rest of them come. Is it increasing the marketing budget? Is it different platforms? All of those things will be worked out, but that's kind of the idea there. So those are the goals. I feel very good about most of them. I'm not going to hit all of them, but wanted to give everybody kind of a look into where we were at on all these scenarios. Any thoughts there, Jerome, on things we need to tweak, focus on, or things that you heard while I was going through that?
You haven't been doing this, and maybe it doesn't have to be you, but I think the other people are going to come from conferences, podcasts, and advertising.
Yeah.
I don't know how else you do that, and to attract more people to the new podcast that's for FTW. I don't know when the name's coming out, so I won't say what we've talked about, but the people, what's my guy's name? John Lee Dumas. He says podcast listeners listen to podcasts. And so that's really the only way to do the audience aggregation aspect of it. I was checking my dashboard yesterday, and I'm at 93 of the 94 guest appearances that I wanted to get done this year. So, you're you're one of the hardest interviews to get on LinkedIn, but because you have all of that pent up demand, I think you could do a blitz and really put yourself in position to get exposed to more investors.
Yeah.
And get them on the list. When you did it the last go around, which was about 2 years ago, you weren't sending people to your list.
That's right.
That was not the call to action. You were talking to them about brokerage, 1031 exchange to get into Kansas City. I think you've got a very different call to action now.
I agree. Yeah. So a part of that approach will be guesting. Obviously we'll have the FTW podcast, which will get some more folks in, but the guesting on other people's shows as well, having a strong call to action, marketing and advertising, increasing that budget most likely is the answer. So I want to talk about how to make a decision, because I've got a lot of decisions to make. We have a lot of decisions to make in our business in the next 30 days. So I'm going through a course called Leverage, Eric Jorgensen, and it's a mental model. I've been going through the course for like 6 months, by the way, on my own time. That being said, when I went back to a module in the course, it's called the leveraged worksheet solution. It's when you have a problem or a challenge or a choice you're trying to make. How can you reframe it? How can you work through all of the different options? And then you can actually apply leverage to it. So I'm going to go through this really quickly. And we're going to take generating revenue, for example, in our business. So I went through and said, okay, what are the different revenue centers for our business? All right. So we have all of these, and I'm going to walk through them. We have self-sourced deals. That's kind of what we've been doing for the last 2 years, right? So just our normal business. We've got co-GP deals. So other folks being able to bring us projects and deal hunt for us. We have exchange CRE, which is getting launched. We have asset management, construction, and then we have selling our projects as well. I think we're going to sell about 250 units, hopefully by the end of Q2 of 2022. There are a few reasons around this, but we don't need to go into those right now. We'll talk about that at a later date. So that's all of them: self-source deals, co-GP deals, exchange CRE, asset management, construction management, and then selling our projects. So then I went through, okay, what's the transaction volume needed? What gross income do you get from that? What's the net income? What are the assumptions? What are the resources needed? Team members, who's leading, the challenges, and the time allocation towards that. So what this did was give me clarity on where all of the capital, where all of the revenue could come from in our business. Okay. So I walked through all of that, and the gross income from all of those revenue centers, and I think this is somewhat in the middle of the road. It could be higher, it could be lower, is going to be somewhere around $5 million. And the net income on that's about $3 million. And so when I then break down, okay, well, where does the time and who's leading all of that? I got to this. All right, marketing, I got 10 hours right now. Co-GPs, I got 10 hours. Exchange, I'll have 10 hours. Investor relations, 20. Underwriting, 5. Email and admin, 10. Podcasts, 5. Strategy, 5. Reading, 7. And that is 82 hours during the week. So I went from the revenue center, getting clarity on that. Then I went to the time audit. I said, okay, well, let me break down those 82 hours. Which ones are actually tied to revenue? 57 hours of those 82 are tied to revenue. Okay, we're still talking, more than full time, right? I'm not a normal worker. I start at 4. So some of this stuff, especially in regards to reading, strategy, all of that stuff is before kind of the work day, so to speak. So I usually have 10 to 12 hours a day, 5 days a week. That's what, 12 times 5 is that 60. So there's 60 hours. So really I have 57 hours that are tied to the revenue centers right now in our business. What I'm trying to get clarity on is, how do I allocate on the schedule next year in the right way? How do I batch? How do I apply leverage to all of those different things? And the way that I got to kind of the ideas to action was this. I asked myself these 3 questions after I went through the revenue center piece. Can you reasonably expect a positive ROI from this solution? How big? If the cost and time to implement were doubled, could you still expect a positive ROI? If there is no benefit, what is the cost of a failed attempt with this solution? And so my whole idea and goal around this is to try to get clarity on where the revenue can come from in the business. Think about how much time it's going to take, who's leading the charge, and then how that actually gets implemented in regards to that, but also wanting to make sure that I'm focused on the right things. And this is kind of what we're going to be talking about today from 9 o'clock until 2 o'clock with the principals. But before I went through that conversation, man, I wanted to bring that live to the audience, but also talk with you about that and see what your ideas or thoughts on there. Is this process make sense? Can other people tap into this thing? And what I still need to do to make sure that these things actually get done and make sure that the right things, Jerome.
Yeah. So let's go back to the focus funnel, right?
Okay.
Do all those things have to be done?
Well, to generate revenue, all of the ones that I will be leading. So we got the self-source deals, we've got co-GP deals, we've got exchange CRE, and we've got selling deals. Those are all things that I would sort of be leading. To bring revenue in the business, yes, those need to be done.
Okay. Which ones, let's rank them in order by the amount of time required by Logan to do each one of them.
Self-source deals and co-GP deals will take my time the most.
Okay.
I've got 40 hours out of the week on those right now.
Okay. And then what's next? So we'll call those 1 and 2. Also, self-source is 1, co-GP is 2.
Yep.
What's 3?
Exchange CRE.
Okay. Then selling is 4.
Selling is 4. Yep.
Okay.
Which can kind of, piggyback onto exchange CRE, right? Because if we're selling our deals through the marketplace, then they're sort of one and the same. But I don't think that I have a different worksheet that I went through and applied the leverage worksheet, solutions worksheet to selling the deals and the different options that we have in those as well. But so I think that's a different conversation. But yeah, I would say that's 4th.
Okay. Now you've got a very competent partner, support team member in Alex for
Right.
3 and 4, which is why those numbers are where they are, is my expectation. Now, earlier in the year, you had an acquisition person who was chasing deals, and we made some changes there. What's the plan from a staff perspective on acquisitions?
It's twofold. The first thought would be to hire an analyst, not necessarily an acquisitions person, but an analyst that can get through all of the projects after iSource, who's our third-party underwriting team, gets through the deals, and then only brings us the projects that meets the certain criteria. So let's say it's 100 deals, 10 get to iSource. They bring us the 2 every single week that we need to focus on. That's solution number 1. The second solution is work with a group like Bullpen or an outsourced kind of analyst that can take it from iSource and then, get it back to the same position that the analyst would. So same result, just different way to get to that result. Those are kind of the 2 thoughts there. I don't think we actually need another acquisitions person. We've solved that with IAG for the time being. It's really just kind of getting through the underwriting and tracking all of that and making sure that we actually get the deals that we need to submit LOIs on, get those out the door.
Okay. And so the make versus buy decision is in-house analysts versus outsourcing at the Bullpen.
That's right.
iSource is the group that's cold calling and reviewing deal or marketing for you guys in the markets you want to buy in.
That's IAG. iSource are the ones that are kind of putting the first model together, and what they're doing mostly is getting the rent comps put in for us and taking the T12s and getting them into the actual underwriting model.
Okay.
So kind of busy work, so to speak.
Well, I mean, the data input is important because that junk in, junk out. And I mean, while a lot of people don't want to spend their time on that, if you don't get it done right, you're in trouble before you even get started because you're missing things that are potentially deals, and you might be looking at something that you never should have looked at. So I understand there. So now your true time commitment for this overall process is the management of it, or are you where are you throwing your energy into it? Is it oversight or is it actually making things happen? And
right now it's making it happen.
Okay.
Especially on the co-GP deals because I'm the one that's driving every single one of those relationships. And so I have a lot of time with that.
Yeah.
The self-source deals, we don't have an analyst right now. So they're either sitting in our, funnel and not getting moved through, or myself and Corey and Parker are having to get in and do that. And so I'm spending a lot of time on that as well. So right now I'm actually doing the work. Yes.
Yeah. So, and the co-GPs are sending you deals. You got to review the deal.
That's right.
And
I got to negotiate the splits. I got to go through all that stuff.
yeah. Okay. And so can we standardize any of this stuff? Do we have the buy criteria for the markets that we want to buy in? And are we able to check box quickly, or is there a way to filter things out so that they know what the splits are before we go any deeper?
We made they
send me a deal. Go ahead. Sorry.
We made some progress on that earlier this year. We put together our kind of co-GP worksheet that breaks down every single function for a project and then allocates it based on the weighted average that we believe is right. And so I do have the worksheet. The only thing with that is I have to create the worksheet every single time. But yes, I can standardize it and I can say, here's a sample, kind of what we've done in the past, and we can work through this together. Each one's a little bit different, but yes, I think we can absolutely standardize it, and I can make it an easier process for these co-GPs to understand.
Well, so what I've noticed, and I don't know what the experience is, I only know of a couple of these deals that you've done because it's a relatively new model. But the majority of people who want to do co-GP want to do co-GP because they can't bring capital.
Right.
So they've got a deal, but they can't get it across the finish line because they haven't made the investment in building an investor community that you guys have. And so right. You can shore that up. So from my perspective, those deals look the same just about every time because there's so many slots where percentages can be allocated, right? And so unless they're able to bring more capital to the deal, I'm not sure why the splits would change a lot.
Agreed.
Now, they may not be excited about what the acquisition fee is or some of the other things that may be tied into that, but here's the term. When you go to a family office, here are their terms.
That's right.
You can try to negotiate the terms, but here are their terms. Are you in or out? Because that will, I know there's a lot of people who want to send you stuff.
Yep.
There's a lot of people who want to partner, but if they can't get okay with these are the terms, I'm not sure that it's worth investing energy into that because you're negotiating something that you don't actually have capacity for.
Yeah.
On the analyst side, it's funny. I talked to Bo Berry yesterday, and he was explaining.
Oh, if you're listening, you need to respond to my email so we can get on a call, my man. Actually, I think him and Crystal are working it out, but love Bo's book. I point people to his content. Videos are a little goofy, but Bo, keep it up, man. I love your goofy videos. They make me laugh, and you're shaking up the industry, and I appreciate that. So go ahead, Jerome.
Yeah, so he was talking about gaps in the marketplace, ones that I've talked about in the past. The thing that's really cool here is there is a real opportunity for you to get out of the input, and now it's really model review. I mean, you've looked at and probably modeled thousands of deals at this point.
Yep.
So you know what's right. Adjusting your property management structure and really digging into the numbers, you know what it actually costs. And so the point of conversation that was probably most exciting for me is both saying, yeah, it's not about percentages. It's about cost per door to actually operate the units. And if you don't know that, you're totally in left field. And so you should be able to very quickly see what's realistic, what's not, and remove that from the process. And so you're saying, hey, we only want to look at 2 deals a week. How deep do we have to go in order to know if those 2 deals are actually worth looking at? And, there's a lot of operators out there who are just saying, well, I'm gonna submit a LOI, I'm gonna submit a LOI, I'm gonna submit a LOI. And it's in the end, I think it ends up being busy work. And you kind of alluded to that a little bit. It's like, hey man, I don't want to look at 1,000 deals to buy one.
Mm-hmm.
Like I want to be more refined. I want to be more selective and targeted. So I'm trying to figure out all of that to say, we've got to figure out where your brilliance is actually applied here and get everything else off the table in the deal acquisition space.
Right.
I think we've got to I don't think you can be the money guy and the deal guy effectively on something less than 50 hours a week.
Yep.
I just think it's going to be overwhelming, and there's going to be something that's missed. Now, is it valuable when you're doing one deal at a time to be the deal guy and the money guy? Yeah, because you can talk about everything in the deal. But I think if we really pull back the layers of the onion and looked at, well, what do we actually care about? Expense ratio, income.
Yeah.
How much of a gap there is between market and actual captured? Do we actually believe that we can capture that space? Management team has been a huge thing for everybody that's been in the space for the last 2 years, for sure. And whatever other things are that say this deal actually can make sense for us. And we have enough data because you're actually operating a portfolio instead of just putting money in and running away or throwing it to a property manager, that we know what deals are likely to be successful based on our way of investing. So if we can extract that, the deals that are performing the best, what was the formula for those? Was it just operations improvement, or was it actually construction, or what was it? And do that over and over and over again. I think you can get really, really efficient, and it will eliminate a lot of the clutter that may be there just because it feels good to be looking at stuff.
All right. I took some notes here, and I'm going to reiterate or communicate back kind of what I said or what I heard. It's very difficult at the volume that we're trying to be at to be the deals guy and the money guy. That's the first thing. Deals can be automated or outsourced or delegated. The money situation is a lot less easy to delegate, right? So that gave me some clarity is I need to be the money guy because I have to drive what Lee's doing. It's content, it's the podcast, it's all of the stuff. And it's the onboarding, it's the, making sure they're warmed up and primed and ready to go. That's what I need to be focused on. So that being said, I need to solve for the deals. And when I'm thinking about deal criteria, what you just mentioned, mine is always going to be margin of safety, and it's always going to be price per door. I just don't care what anybody else says. Like a lot of the co-GP deals, I say, okay, well, what's the price per door? All right, great. So that's 1970s and we're at below 70K a door. Okay, I can make that work probably. But if it's 1970s and it's 70K a door and needs 20 a door, okay, well, that's going to be tougher. And, increasing rents 300. Increasing the rents $350 a month is like not, real exciting for me right now. So that's an easy way to move deals out of the pipeline. And I'll give a prime example. The legacy apartments we bought earlier this year in Kansas City, 162 units. My cost basis is $55,000 a door. I just got confirmation yesterday that our main comp that we used and walked and have reviewed and made an offer on just sold for $90,000 a door, less than 3 minutes away. So like that is an easy framework to say, all right, great. That deal's probably working. That one probably won't. And let's figure out how to filter this pipeline based on those certain things. So if we're looking in Tulsa, great. If it's this age, this vintage, it needs to be right here. If it's in Oklahoma City, might be a little bit better, right? We need to be here. If it's in Kansas City, we need to be there. I think that's a really simple framework to say it doesn't matter where we can go. Are we ultimately going to say no to the deal because, it's going to sell for $100,000 a door and it's 1960s product and we bought something down the street for $45,000 a door? We shouldn't spend time on that project, right? So like that's the one thing that will make everything else easier or unnecessary. And so I think that's what we have to figure out is how do we apply that to every single market that we're in and then test it and see which deals come through. And if we can actually get LOIs out on those, man, I think that's a great framework to work through on that. And I that can be taught, right? I can teach somebody how to do that.
Yeah, absolutely. And, people want to get creative and they want to get cutesy, and that's not a business, right? That's one off. That's magic. That's hocus pocus. And eventually you get bit. You really want to be intentional about specifically the buy criteria. And I can't emphasize this enough. Cost basis matters.
Yeah.
Cost basis absolutely matters. It's your margin of safety. And there are going to be things that go wrong. There are going to be things that you don't anticipate. And if you get too creative, you open up yourself to a tremendous amount of risk.
So each one of these revenue centers, Jerome, I'm asking myself a few questions. How can I apply leverage to this? So let's take, for example, the self-source deals. We're going to apply leverage to this by implementing the deal criteria and figuring out who the analyst and or third party is going to be to get us those 2 projects a week that actually get through the priority, right? What would this look like if it were easy? Well, it would look like if it was easy is I only had 2 projects a week to actually underwrite and that already met the deal criteria that we just set out, right? And that also goes into number 3. What is the one thing, if completed, would make everything else easier or unnecessary? So I think we've got that in a good spot. I have to go figure that out, right, and implement that in the business. But that's really important. So if we go to revenue center number 2, which is co-GP deals, how can I apply leverage to this? Well, fantastic. We already talked about it. I wrote the notes down. Get your standardized co-GP worksheet example and narrative put together and instructions and get that out early in the process. If they can't get on the same page with that, no problem, man. Hey, this is just how we operate. And if it doesn't fit your model, that's okay. Just appreciate the conversation, but get that out now instead of, okay, let's start with deal and then get to terms, right? So that's how we can apply leverage to that. That's what it would look like if it was easy. And that's the one thing that we completed, make everything else easier or unnecessary. Exchange CRE. How can I apply leverage to this? Well, I'm launching right now, and launching a new initiative, a new business is not going to be easy, and that's going to take a lot of my time. But what I can apply leverage to that is I can use the focus funnel inside of this right now. And I've already done that. And I'm hiring for somebody that's going to support that, and Alex is joining. So I've applied a little bit of leverage to that. I know that the first 3 months are going to take a lot of my time, but that's okay, because after we get the process put in place the right way, it's going to make it a lot easier. We'll look at selling the deals. How can I apply leverage to that? Well, each project might have a different, selling strategy. And so I need to work through that worksheet with Parker and Corey. And then I need to figure out what the strategy for each one is. And I need to delegate that, right? I think I'm getting clarity on where this needs to be. But the number one thing that I want to point out is, Logan, you cannot be the deals guy and the money guy and still do your podcast and your reading and enjoy your work. So you got to pick one and you got to figure out how to blow that one up. And I can tell you, if we had the capacity to raise $3 to $5 million a month, that is literally the one thing that if I can complete that would make everything else easier or unnecessary, because I'm not going to be worried about, well, where am I going to get the capital from for this project? The flip side of that is, if we can raise $3 to $5 million, we also need to have a great pipeline of good deals, because just because we can allocate capital doesn't mean I'm going to. And so being able to have the criteria on that, on the margin of safety, is really important. So all these things are tying back together for me right now, Jerome.
But be clear, there is pressure if you have a deal and you don't have money.
Yes.
There is no pressure if you have money and you don't have a deal.
That's right.
Right? There's no 3 or called strikeout in real estate investing. And so if everything's margin of safety, I can raise money at will for the deal. And honestly, if there's scarcity in your pipeline from a deal, then the people who are ready to invest with you, hey, better get in while it's hot, right? Oh, yeah, there's another one on the way. I don't have to invest in this one. Well, you can choose not to do that, but we may have two next month or we could have none.
Yeah.
It's totally up to you. And we are going shopping and you're a part of that. If you aren't on board when it comes time, because you got to know we're presenting the best to you. You can't get this anywhere else. So, just raising that level of scarcity, because I mean, deals are difficult right now. Ones with appropriate cost basis.
Woo! I hope you guys heard that. I mean, that is what we just went through. Many people would spend $10,000 for an EOS implementer or somebody to come in and walk through that, guys. We literally just broke down the 4 different revenue centers in our business. I was unclear on where my time audit should be. I am clear now. I have ways to apply leverage and to make everything else easier or unnecessary that I can actually go implement into our business that will lead to over $5 million in revenue in 2022 for us. I mean, I think that is, especially for me right now, having this to be able to go talk with the team, that's invaluable, man. I mean, when I put all this stuff out on the sheet, I didn't know, where that clarity was going to come from, but talking through that and going through all those questions, man, we got 2 main things here, and that's going to be able to allow me to apply leverage to this and actually go implement. So
the last piece of this, dude, is your brilliance, right? If we go all the way back to February, March, your brilliance is in the individualization, which is an investor relations skill set. That's not a deal skill set, right? You might build a relationship with the seller, but you can't do that with every seller, because at the end of the day, the terms are going to be the terms. We can buy it at this cost basis because it needs X amount of work from a construction standpoint or renovation standpoint. And we have to be at this number in order to get all our financing in and deliver the returns that we want for the investors.
Yep.
And so, I mean, all of these parts and pieces come back together. You're uniquely positioned to do this skill set. You're forcing the other stuff. It's creating stress. And because we always used to say, do your job when we were playing, whether it was baseball or football. And so if, I'm a linebacker and they run sweep the other way and I don't check the quarterback for bootleg, hopefully people are keeping up with the metaphor, and I run across the field and then the quarterback runs bootleg, now I'm out of position, and my real job, in this case it would be raising capital, isn't done because I'm over here chasing the play action or the run misdirection that somebody else should be tackling for us.
That's right. And what's clear to me now is when I do chase both of those things, one ultimately they're tied together, right? And so you always have to be raising capital no matter what. It doesn't matter you have a deal, you don't have a deal. You're raising capital with every conversation that you have, every piece of content that you put out. People miss that. It's not just because you have a deal do you start. If you wait till that, you're done. You're toast, you're screwed, and you will lose. You have to be ultimately always doing that. There is little to few folks in the industry that have the same amount of brilliance that I can create on the top of the funnel to put that back down onto our team. So with exchange, with investor relations and the marketing, I have got to stay top of the funnel at the very top. I can eliminate, automate, and delegate the other steps, but I have to be involved on putting the folks into that funnel, man. So, and you can't do that. You cannot automate that in regards to the capital. I can figure out a way to do that on the deal side of thing. And I'm very clear on that right now. Guys, I hope that was beneficial because I'm juiced up. I'm ready to go. But I want you to know I spent 6 hours just getting to the point of being able to present this to you guys. 6 focused hours. Do not disturb on the phone. My chill step going on in the background at my home office, working through this plan just to get to this point. That's just the ideas. You have to get clarity on them and then move them to action. And the way that you do that is putting these types of documents together and walking through this. If you don't have somebody to talk through that stuff, maybe you should reach out to Jerome. I don't know if he's got any more time, right now to be able to do that, but there is so much value in this conversation that we're having here. Maybe you can just listen to this episode and how we broke this down and apply it to your own business. But, that only gets me so far. I have to talk through this, and then I've got business partners that I have to go work through, and they're going to have feedback as well, which is extremely important. I have 4 1, 2, 3. We have 4 brains, work very high level brains, IQs above 125 on all 4 of those. I did an IQ test the other day. I was very surprised with myself. I pat myself on the back. I was surprised to hear that I was above average. Anyways, that's a whole different conversation. But I have 4 people looking at this saying, here's where you're missing. Here's where you're at. Here's where my feedback is. Here's what you should change. Right. And how many other people that are running business right now have the ability to tap into 4 other brains that allow them to get focused on this? That none. And that's why you get stuck in paralysis by analysis. But that's why you have to be able to look at this thing and take it to folks and be able to work through this stuff, man. This was, I don't know for the listeners or not, but this was so important for me. And I'll be able to come back to you guys at the end of this next 30 days with a really, really strong plan. I've got my spreadsheet I'm looking at right now. I'll have another tab in here that says, the time audit and where that's actually going to go on the calendar. And every single week I'll be able to actually execute on that because my time is going to be batched in regards to each one of these initiatives. And man, I tell you what, I feel pretty good about that and feel very clear about this, Jerome.
I'm excited, man. Now from clarity, you can move fast, right? That's the thing that a lot of people miss out on is it's like, oh, I'm thinking. No, I know what I need to do. I just need to go do it. And when you take out all of the confusion, you can be laser focused and super intense and not get caught up in the distractions. I want to go back to the Code GP thing. It's always market operator deal.
Yep.
And so if somebody's sending you deals from a market that you guys don't have any interest in being in, then it's really easy to be out on that and say, hey, here are our markets. And I'll be honest with you, I know it's Kansas City and I know we've done Lincoln, Nebraska. I think there's some stuff going on in Iowa.
Yep.
But, if we are at 5 cities or whatever it is, let's be really clear about those cities and let everybody know so they don't even come and tell us about things that, we're not interested in.
That's exactly right, man. All right. I'll leave you guys with this because we started with a quote from James Clear, but this was a quote that you won't find anywhere else other than the podcast if you listen to him and Ed Milet. And this is so true. After a hard workout or a good night's sleep, your problems adjust to the appropriate size. You're able to see them clearly and objective. He says in the podcast that whenever he's got a problem or he's having a bad day, if he can just get an hour of exercise in, it really does change the trajectory of that day. And it reframes the problems that he's working on to the appropriate size. And I can speak to this firsthand, how important this is. I've been really focused on my sleep recently, getting good sleep, and also really focused on the workouts, guys. And that will create even more clarity, and you'll be able to see things a lot more clearly. So I'll leave you with that. Jerome, thank you for going through the process today. I think this was extremely beneficial. Probably should lock this episode up and charge people $100 to listen to it because I tell you what, man, there was a lot of value in there, but we're bringing it to you free on the Compression Podcast every single week. And, if you haven't started your GPS, go back, listen to that episode and figure out what your goal, purpose, and strategy is. There's no better time to do that than right now. Jerome, any last words for the listeners out there?
Finish strong, baby.
Finish strong, guys. Finish strong. Have a great weekend. We'll talk to you next week. Jerome, appreciate you, man. Hey compressors, if something you heard struck you, made you feel a little bit uncomfortable, good. Head on over to compressionpodcast.com. And then you can also subscribe wherever you listen to your podcasts at. If you feel inclined to, please leave us a review. It's obviously helpful. But instead, I'm going to call you out today. I'm going to call you out and make sure that you do your part, sharing this message by sharing it with one person that might need to hear what we talked about today. Be great. Nothing else pays.